Welcome to the show that takes up no more than 5 minutes of your time, but could help you gain massive real estate knowledge. It's 5 Minutes in Real Estate with best-selling author Shane Willis.
Hello, it's Shane Willis, Pensacola real estate expert, bringing you today's episode. Man, it's a nice Thursday, last day of May. Market yesterday went for a little ride, up triple digits, up 300 and some odd points, pretty much erasing what happened Tuesday. And I got a whole lot of responses from yesterday's little rant. If you didn't get a chance to listen to my rant about the Wall Street Journal article and how I thought he got it wrong, listen to yesterday's episode. I think I titled it Wall Street Journal Got It Wrong. Pretty much was what the title was. But it was interesting to get some dialogue back and some nice comments about how they feel that the particular writer of the Wall Street Journal probably needed more education. So, but it was a good article. I say a good article. It was written well as a journalist. It told a story, although I think the story was still had a premise. I'm not going to spend another podcast episode talking about it. Today we're going to talk about rates because they just came out this morning. I was coming home from the gym. I was listening to CNBC, and it actually just came out that there's about an 82% chance that Feds are going to raise the rates again here in about 10 days. I think it's June 10th is when that meeting happens. There is about a 52% chance they're going to raise in the third quarter. And the fourth quarter is the one that's up in the question. And a lot of it has to do with what happened with Italy the last couple of days, how they are talking about leaving the euro, but that really doesn't have as much to do with the Fed as much as the European economy. And I'm not going to bore you with those details because sometimes even when I listen to those economists, my eyes glaze over. And I'm in this industry, so not going to bore you with that. Instead, I'm going to talk to you about how the raise in rates, if that's going to affect real estate prices or not. And I think they are. I think they are going to affect real estate prices, but not in the way you think they will. So I got a bunch of reports. Today I'm going to put a bunch of links out there because I actually looked at a bunch of economists. Mortgage interest rates have risen more than half a point since the beginning of the year, and we're talking about much, much more by the end of the year. But is that going to affect house prices? I don't think so. And here's why. I'm going to just start telling you that there's a bunch of economists that I'm going to quote today. Mark Fleming, which is First American's chief economist, says, understanding the resiliency of the housing market in a rising rate environment puts the likely rise in mortgage rates in perspective. They are unlikely to materially impact the housing market. So he's not thinking so. Terry Lowe's, which is the founder of Pulseonomics, constrained home supply, persistent demand, very low unemployment, and steady economic growth have given a jolt to the near-term outlook for U.S. home prices. These conditions are overshadowing concerns that mortgage rates expected this year to rise will affect the house prices. So he's saying now. One more. Laura Goldman, which is the co-director of the Housing Finance Policy Center at the Urban Institute. Higher interest rates are generally positive for home prices. Despite decreasing affordability, there were only 3 periods of prolonged higher rates, 94, 2000, and the taper tantrum in 2013. In each period, the home price appreciation was robust. So then I got 3 surveys for you. I got a home price expectation survey, a Freddie Mac Outlook report, and the CoreLogic HPI forecast. I want to make sure I give you all this information so you know that it's not just me and my opinion. No, this is the opinion of many. Do we think it's going to affect the rates or the value of houses? No. Is your buying ability going to go down? Yes. So could it potentially affect super luxury? Maybe. If you were able to afford super luxury to begin with, it might not really matter. So the $1.5 million property that just came out on the market downtown, if you were able to afford that before, it's probably not going to affect you all that much anyways. But the $200,000 house that you can afford now, that is your max affordability, could be $185,000 next year. If you're waiting a year, it could go down $15,000. Now your payments are going to stay the same, but you're only going to be able to spend $185 versus $200 now. And we're still seeing prices increase in value. So the inflation on real estate is still going to go up. So that $200,000 house is actually worth we'll say 210 next year, or 220. And so the $185,000 house that you can buy now, or that you can buy next year, because you didn't buy the 200,000 a year, you're only going to buy 185. It's actually 170 that if you bought it now. So it's not as nice of a house. So that buying ability will go down. But does that mean that prices are going to come down? Doesn't look like it. Supply's still low, demand's still high. Those two are what kind of really dictates pricings. So, easy day on Thursday. It's just nothing but economics. That's all I got for you. As always, if you have not subscribed to get the tips, tricks, get these surveys so you can take a look and see what I'm seeing. Get over to 5minutesinrealestate.com. That's 5minutesinrealestate.com. Also, if you have not subscribed to the podcast, we are on iTunes, Google Play, Android Play, Stitcher. No, we're not on Stitcher. Not yet. YouTube. What are the other ones? Shoot, I don't even know. Not Stitcher, Spotify. Spotify's what I'm thinking of. Oh no, Spotify's not out till next month. SoundCloud. Yeah, we're all over the place. Just go search Minutes in Real Estate in your favorite player. We're probably there. And if your favorite player is Stitcher, you're probably not listening to this anyways. So anyways, get over there and get subscribed so you get notified when I update these podcast episodes. And finally, just like I say all the time, I do not ask for any money for putting these out, but I hope I give you some value and understanding what's going on in the real estate market. So if you find value in this or any other episode, I ask that you share it on social media. It's an easy Thursday on economics. Don't forget, tomorrow is Friday, which means Infographic Friday. So get subscribed today so tomorrow you get the infographic. We always have fun with those. Have a great day.